At the time of the admission of a new partner, we prepare the revaluation account to know the profit and losses for the old partners. The profit or loss of the revaluation account is distributed among the old partners only in old ratio. Preparing revaluation account, you must know that increase in assets will take place in the credit side and decrease in assets will take place in the debit side. You must know only increase in assets, and everything is opposite to that. Increase in assets, credit side, increase in liability will be debit side, and decrease in liability will be credit side, decrease in asset debit side, opposite of that. Like increasing assets credit side, so decreasing assets the debit side, and liabilities are opposite, like that. Increase in liability, decrease in liability. So how to know assets are increasing or liability increasing, decreasing? In every question there will be one balance and some adjustments are given. You have to match all the assets and liabilities with the adjustments to know the difference that assets and liabilities are increasing or decreasing. For example, the machinery is given inside 50,000 and outside it is given 60,000. So now you have to decide machinery is increasing or decreasing. So machinery is 50,000 inside, 60,000 outside. It means machinery is increasing by 10,000. So while preparing the revaluation account, increase in assets credit side. So increasing machinery is increasing, increase in machinery by 10,000. Write down here 10,000. Debtors are 4,000 and now debtors are 2,500. Debtors are increasing or decreasing? Decreasing by 1,500. So treatment is decrease in assets, decrease in debtors, 1,500 here. Creditors are given 500. Creditors are liability. So you know the formula for the liability is the increase in liability debit side, decrease in liability credit side. So creditors are given 500 and in adjustment creditors are given 600. Your liability is increasing by 100. So increase in liability, increase in creditors 100. One important thing is, if any asset or liability is there for which no adjustment is given, will not take place in the revaluation account, like stock. Stock is given 1,000 inside the balance sheet and there is no adjustment for stock. So stock will not be the part of revaluation account. Let us see the final pro forma of revaluation account. This is the final pro forma of revaluation account. Increase in assets, decrease in assets, increase in liability, decrease in liability, and balancing figure will be the profit or loss. If coming in the debit side, the profit, and that transfer to A and B in old ratio, old partners. If the difference is coming in this credit side, then this will be loss, and loss transfer to A and B in old ratio. So this is the preparation of revaluation account.